Today we will break down a trade which I took on Wednesday. It's a trade which I took on CL, specifically MCL futures, and it is a trade that is based on a volume profile and on a setup which is called 80% rule, and that is a setup invented by Jim Dalton. Jim Dalton made this setup for market profile, but I've adjusted it and I use it for a volume profile strategy. This strategy says that if markets move outside of value area of previous day or previous week, month, year, and then the market returns back inside of value area, there is high probability. Originally it was 80% probability, that's why this setup is called 80% rule, that the market will return back to volume point of control and value area high. But when I noticed that the market played a possible 80% rule setup, I've entered the trade when we closed back inside the value area. After we closed inside, I entered the trade, I've placed my stop loss below the last low, and I traded this setup as a 1-to-2 risk reward ratio, and I closed it just below the volume point of control. However, by trading 1-to-2 risk reward ratio, I followed my plan. I closed the trade in a very nice profit. So I've made about $60 on this trade per one account, and that's it. Very simple setup invented by Jim Dalton. It's called 80% rule, just following value area, and when we break outside and then if we return back inside the value area, there is a high probability that we will go to the other side of value area.